Hey folks, this is Rainer here from Trading with Rainer. So welcome to part 5 of my Harmonic series, and in this part I'll be explaining to you how I plan my harmonic trades to the execution of those trades. So if you recall in my earlier videos on Confluence, I said that I do not solely take a trade based on one factor or two, alright? I do not place a trade because of one candlestick pattern, and similarly I do not place a trade just because a potential harmonic pattern is forming. What I look at is actually three other factors, right? These three factors I look at pretty closely, which is before I look at a harmonic trade, I like to know the trend and to see if there's any support resistance nearby, which my stops can go beyond it, alright? And if these two factors are there, only then will I take a trade should a harmonic pattern present itself. So these are my three factors of confluence for trading harmonics. Okay, so if you guys do have all these three factors lining up, then you can move on to the execution stage. Alright, so in the execution stage, we know that we always expect price to terminate at point D, right, for the gartley pattern and the bat pattern with confluence of the AB equals to CD pattern. So usually at point D, I'll place a limit order, right, depending whether I want to buy or sell. So a limit order will usually be placed at point D, and stops will go beyond X, right? So for example, I have a bullish gartley, I'll place a potential buy limit order at D, and my stops will go 1 or 2 pips below point X, which is the swing point. Okay, and for targets, I will usually draw a fib retracement. Okay, I won't say I usually do that. This is a very textbook based answer, right? Personally, I do not use this exit, but a lot of textbook setups would actually encourage exiting through this methodology. So I'm just here to share with you guys, because exits are actually very discretionary, and you can just simply exit based on your own experience with the markets. And whatever exits you use, do remember to exit consistently. Alright, you don't want to be exiting one methodology and the next time you execute the same trade, use another methodology. No, you don't want that, because your results will be inconsistent. If you were to have a predefined exit, always exit consistently. Alright, so for this I recommend targets, which is a fib retracement of swing A to D. Alright, so with that, let's look at some charts to further illustrate these points I was just discussing about earlier. Alright, so for the planning stage, remember I talked about the trend, support, resistance, and harmonics. So looking at this chart right here, we have the euro dollar sometime back in December. Alright, I cherry picked this entry just to illustrate my points. Okay, so for the trend, what do we have here? I'm sure most of you can tell me it's an uptrend, alright? So for here, we are just looking for longs because the trend is up. Okay, so do we have any support resistance nearby? So let's use our support resistance knowledge and put them to use. We know that once resistance is breakout, price will come back and test as support, right? So I can draw one here, alright, and another here. Previous resistance now turned as support. Okay, so we have these two here. So in this chart, I also identified a gartley pattern, and let's see if you can, draw this together with me. I'll draw from swing X to A. Alright, so B terminated at the 618 level, right? Okay, so if B terminates at the 618 level, I will anticipate a gartley pattern because that's the rules of engagement. So with that, I'll take my fib expansion tool and draw my fib expansion. Okay, in anticipating that price will terminate at point D, which is 100% of the move. So we do have confluence here, 100% and 786, right? Because we know that gartley patterns have to terminate at the 786, and the AB goes to CD pattern will be confluence around that area. So we did have that in this chart. Okay, so with that, what I'll do is I'll place a buy limit order at this level here, right? Somewhere in between the 100 and 786. I'm not sure if you can see it, right? To be exact, I'll be put it in between probably the 131.80 or 131.83, around there, and my stops will actually go below X here. Okay, so let me do some labeling. This will be X. Okay, X. This will be A. This would be B. This would be C. And this would be D, right? Termination point, alright? So let's run through the charts, right? And see how we are going to manage this trade. So for now, we are long. We have a buy limit order at the 786 and 100 confluence area with our stops below X. Okay, so let's run through this trade and see how it's performing. Right, we can see this candlestick here, we got long, alright? When the bearish candle closed lower, we got long because our buy limit order is set down there. So our stops is down here at X, alright? So let's fast forward. You can see that price bounced off, alright? So now we have a D point already, which is this level here. Right, let me remove the fib. Alright. So now to draw my exits or where our exits, we know the D is actually here because price form a swing low. So to exit, you can use a fib from A to D. Alright. And look at these retracements, you can actually either choose to exit all your position size on one level or have a multi exits, meaning you enter through multi lots and exits at different level. So what I'll suggest is traders to look to exit the first lot either at the 50 and 618 level, right? Because at that level you have at least a 1-to-1 risk reward. So assuming you entered around 786 this here, your stop loss is about 48 pips. To the 618 is about 54 pips. So you have slightly more than 1-to-1 risk reward. So your first lot position should exit here, right? And set the remaining to break even, alright? So for the next target, you could possibly look for the 100% move, which is around A, which is also a resistance level. So your second lot, you could look to exit at this region down here, okay? Or how your remaining lots, it's a good idea to exit here, okay? So fast forward, you'll see that what price did was it tries to rally, close down lower, and eventually stop loss at break even, alright, where we entered. So for this trade, we only managed to have profit on one lot, and the rest was stopped out at break even. So regarding exits, right? So personally, what I'll do is I would enter at D with my stops beyond X, and my targets usually look to exit at A minimum, right? I'm quite aggressive in my exits, so I like the trade to run as long as possible. So my exits, alright, I'll either choose to exit all at A or partially at A and let the remaining run as long as possible. Alright, so if I were to use my own rules of engagement in this trade, I would just simply be stopped out in break even because I do not wish to take some profits at the 50 and 618 level because that's just my way of trading the markets. That's me. So no two traders are the same. So with that, I hope you guys find this useful and can actually understand how I go about trading harmonics, right? With that, I wish you good luck and good trading. Thank you.